Hey guys, welcome back. I hope you had a really great day trading today. So today was a fun day. We did have low volume, and when we do have low volume, it's very typical that this 35 EMA acts as a support. And in SPY, we did open with a gap up, and we gapped up to just about the top of the implied move. And then we pushed up above all-time highs, got to the very top of the trading range before we came back down to the 35 EMA. And there we did see a technical bounce, came back down, we filled the morning gap, and then from there, the 35 EMA brought us back up. SPY did close up 0.28%. VIX popped 5.46%. And we did close within the implied move. We definitely got outside of the implied move right here and outside of the trading range, but we did get brought back down. So all three strikes here, if you chose any of those to sell bear call spreads at, those would have been a 100% win at close. And that's exactly what I did, but in SPX. I'll get to that when I get to SPX. But really great day to trade spreads. Let me know what you guys did. Did you guys sell puts? Did you buy calls? What did you do with these strikes? All right, so that was SPY, and switching over to QQQ, we also started with a gap up here, and we gapped up to the 35 EMA, which yesterday we did close underneath. So I always say know where your 35 EMA is. That's an important level. And we did gap up right to it. And from there, we did go up to the top of the implied move. We got above the next day's top of the implied move and to the top of the trading range. Then from there, we did get pulled back down. We bounced back up to the 35 EMA. That level was resistance here. And then we did come back down, fill the rest of this morning gap, and then bounced back up a little bit at close, but we still closed underneath the 35 EMA. So in SPY, we did close above the 35 EMA. So SPY still closed bullish. QQQ is underneath the 35 EMA, and that is actually a neutral close. It's not quite bearish, but it's neutral. The aim today, if we want to move higher, is to get back above that 35 EMA. Did close up 0.27%. VXN closed up also 6.32%. So volatility is definitely increasing, and we did close within the implied move in QQQ. We did get out here above it in the earlier hours of the day, but we did get pulled back down. So again, all three of these strikes up here were excellent targets to sell, especially on that move up. When you're selling credit spreads, you want to actually lean into the premium. So the higher up you sell those credit spreads, the more premium you collect. So that was QQQ. Switching over to SPX, same gap up at open. We did gap above the 35 EMA. Yesterday we closed right at that level. So today, gap up just underneath the top of the implied move, which was 56.45. And then from there, we pushed up, made new all-time highs, got above Tuesday's top of the implied move, and we got all the way to the top of the trading range. When we get up to the top of the trading range like that, you better believe I am selling credit spreads. And then from there, we did get pulled back down into the implied move. We bounced on the 35 EMA, little technical bounce. Top of the implied move is right here. We saw that as a resistance, and then we dropped to fill the rest of that morning gap completely. And then from there, we did get pulled up into close. So SPX did close up 0.28%. VIX again up 5.46%, and we did close within the implied move here. And IWM, small caps, are having a lot of fun. And here we did open with a gap up. I didn't put any of the gaps in yet, so you can't quite see it. You can see it, but I don't have it in. We gapped up and pushed to the top of the implied move, pushed above the next day's top of the implied move, and for the rest of the day, we traded completely outside of the trading range. The only thing within the trading ranges was the wicks, so we did find support above the trading range. Definitely looking quite overbought here. I'm guessing we are seeing a gamma squeeze here since we did break up. I'm sure there were a lot of bets that we would drop, and when we saw this gap up, those bets were forced to cover, and we're seeing this push up. Do I think it's based on fundamentals? Not really, but it still has to run its course. We are definitely overbought though, so in my opinion, I would start looking down, but that does not mean that the run is over. Even if we see a pullback, we can definitely still move higher. So IWM did close up 1.90%, biggest move of the day of the four, and the Russell Volatility Index, RVX, closed up 5.17%, and we did not close within the implied move in IWM. And you can even see the 35 EMA has moved into the implied move, so we don't necessarily have to pull back very hard, even with being this overbought. So that is IWM. We also did have Chair Powell speak today. I actually didn't listen to it. I probably will go back and get the highlights of it, but I did hear that he did say that interest rates, they're not going to wait until 2% for interest rates to be lowered, and that is likely because the economy has been sufficiently slowed down to where they can lower interest rates. That's not necessarily bullish. A pivot with the Fed is likely a bearish signal. So that's all I've got for the recap for today. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. And also don't forget to subscribe and turn on notifications so you get notified every time I do post a new video. Alright, so starting in SPY, tomorrow's implied move is between 558 and 565, and that is from options. The 30-day average volatility is a little bit wider, 556 to 566, and the implied move on Wednesday's contract is between 557 and 566. To the upside, the very first level to look for is going to be right here. We bounced on the 35 EMA today, and when we did, we saw resistance right around 562 and a quarter. So let's put this right here. That is the first level to look for, and then if we get above that, then we have all-time highs pretty much flush with the top of the implied move. All-time highs are at 564.84, and 565 is the top of the implied move. And then the top of the implied move on Wednesday's contract is 566. And then to the downside, we do have the 35 EMA right here. We did drop underneath it today, and then we did get pulled back up right before close, so it is just underneath where we closed. And hopefully by now you realize just how important the 35 EMA is and how important it is to know where it is within the trading range. So if that level holds tomorrow, then look up. But if we do drop underneath it, then we do have the bottom of the implied move at 558. And then the bottom of the implied move on Wednesday's contract is 557. And we also have this up gap. And this up gap is from PPI last week. So we had CPI right here with that drop. We gapped up with PPI, and I should probably label that. Let's add that in. So that is the PPI gap right here, and the bottom of that gap is at 556.44. So it's just underneath our trading range. If we do drop to that level, I would think that that would offer us support, maybe bounce us back in. And not sure if I said or not, but 558 is the bottom of the implied move, and then 557 is the bottom of Wednesday's implied move. And underneath all of it, we have the 30-minute 200 moving average with that momentum that is still pushing up. In my opinion, I think that we do catch up with that level sooner than later with a healthy pullback, but keep an eye on other indicators within tomorrow's trading range. Definitely trade the chart and not my opinion. Okay, so that was SPY. Tomorrow's implied move in QQQ is between 493 and 502, and that is from options. The 30-day average volatility is a bit wider, 491 to 504, and the implied move on Wednesday's contract, 491 to 503. Let me just reposition this really quickly. And to the upside, the first level to look for in QQQ is going to be the 35 EMA. We did actually close underneath it, and that is a neutral close. And so we need to look to that 35 EMA and see if it is resistance, then look down. But if we do get above it, then the first level to look for is going to be right here. I usually take out most of the wick when I look at resistance, but if you want, you can look a little bit higher. The top of the implied move is basically where we saw that wick top right there. So right here is 500, but 502 is the top of the implied move. And then 503 is the top of the implied move on Wednesday's contract, and just outside of tomorrow's trading range, we do have all-time highs, and that is at 503.52. And we did make that right after CPI was released, and then we dropped that same day. So right here is where we did see all-time highs. That is just above the trading range tomorrow. And then to the downside, we do have the bottom of the implied move here at 493. 491 is the bottom of a Wednesday's contract, and we have the 30-minute 200 moving average just underneath all of it. Remember, we did get that big drop last week after CPI, and it did give the 30-minute 200 moving average a little push down. So momentum is slowing down a little bit in QQQ, but it is still pointing up. So if we do drop to that level, I would expect it to catch while we test it to see if it does hold as a support. So that is QQQ. Switching over to SPX, the implied move over here is between 5,600 and 5,665. That is from options. The 30-day average volatility a little bit wider, 55.80 to 56.80. And then on Wednesday, the implied move is between 55.90 and 56.75. And the 35 EMA is just underneath where we closed. So when we dropped today underneath it, we did get pulled back up to close right at that level. So then the first level to the upside is going to be where we bounced off the 35 EMA right here. I'm going to add that in. And that is around 56.40. Just a little bit above 56.40. So that's the first level to look for, and then if we get above that resistance, then the top of the implied move is at 56.65, which also lines up to where we did see resistance today, and just above that is where we made new all-time highs today at 56.66.94, and then the top of the implied move on Wednesday's contract is 56.75. So then to the downside, that 35 EMA, super critical level, you could see we did bounce here. That was Friday, or rather that level caught us on the drop on Friday, and then we gapped back up today, and then we saw support here, and then we got pulled back up at the end of the day. So definitely looking like a little bit of a weakness, but look to that level, and if we start seeing support, then look up. But if we do break below, then 5,600 is the bottom of the implied move. 55.90 is the bottom of the implied move on Wednesday's contract. And then underneath our trading range, we do have this up gap. And this goes back to last week, and it is from Monday going into Tuesday. And that was the first day that Chair Powell spoke in front of the House. So that never got filled when we dropped. We actually bounced right at the bottom of this second up gap, which was from before the second day he spoke. So the bottom of that gap is at 55.71. Let's call it 55.70. And then underneath all of that, we have the 30-minute 200 moving average, which is still pointing up and is still very bullish. So if we do drop to that level for any reason, that would be a pretty big drop for tomorrow. But even later in the week, if we find ourselves near the 30-minute 200 moving average, the momentum is still positive here. So that is SPX, and switching to IWM. The implied move here is between 214 and 220, and that is from options. And the 30-day average volatility is between 213 and 222. And then the implied move on Wednesday's contract is between 213 and 221. And to the upside, the first level to look for is where we did make highs. This is at 218. We did see resistance, and we saw that level twice today. So 218 is the first resistance level. If we get above that, 220 is the top of the implied move. 221 is the top of Wednesday's implied move. And then let me zoom out really fast. I just want to see if we have anything further back as a resistance. So the next resistance is around 223. So I don't think that that is in tomorrow's trading range at all. So 223 is about right here. So maybe make a mental note of that, but that is not within tomorrow's trading range. So then to the downside, if we do play out this overbought scenario right here and start coming down, then we do have the 35 EMA. It is in the bottom of the trading range tomorrow. At the moment, it's underneath the implied move, but by the time we start trading tomorrow, it'll be right there at the bottom. So if we do pull back, 35 EMA is right here. And then at the bottom of the implied move, we do have this up gap from today that was left open. That is at 213.5. And just above that, we actually have the bottom of the implied move at 214. And then 213 is the bottom of Wednesday's implied move. Underneath all of that, we do have the up gap from yesterday. Sorry, I take that back. That is from Friday after we gapped over this previous resistance. That resistance is a long time level to look for. It is right here where we saw resistance in March. We got pushed back down. But looking back even further, that was a resistance level in April of 22. And then before that, for about a year, it was our support. So maybe if we pull back to that level, that could turn into a support. And then we start trading within a new range. And with this bullish cross up right here, that is entirely possible. 211, still a very important level to look for. And that is the bottom of the gap and outside of our trading range for the next 2 days, but certainly within reach within this week. So that is IWM. Tomorrow's trading ranges look like a lot of fun across the board. Have fun, trade safe, make sure you take profits when you're up, and I'll see you guys tomorrow.